Hi, welcome to the Market Alert for Friday, the 8th of November 2019. So yesterday we see the madness continue, even used here as we get the melt up. Traders warn chasing stocks with this backdrop is madness. The whole world's gone mad, frankly, and particularly the financial side of things. And this is very important here. What could possibly go wrong? Well, we all know what can go wrong. And that's at the end of the day, when this bubble bursts, it's going to be catastrophic. And to add to the mix, we see yesterday, Bank of England vote raises chance of interest rate cut. And this moron here, Michael Saunders, was one of those on the Monetary Policy Committee backing cheaper borrowing. They want cheaper money. The only people that are benefiting from this cheaper money, it certainly isn't people with credit cards, because they're still running at 18% or whatever. The Bank of England want to take interest rates back down to either a half of 1% or a quarter, I can't remember. Not that it's important, it's a paltry sum as it is. But all it does is give the bankers cheaper money to then put into the stock market. It doesn't benefit any consumer or anybody else. It's just unbelievable. And these smug so-and-sos, honestly, you couldn't make this stuff up. It is just absolute greed on a different level. Anyway, back to the markets yesterday. Another thing, trade war, Trump, rumours yet again in the pre-market session. No one's seen this agreement yet. This is just pure manipulation. And this is, say, in the pre-market session yesterday morning, just after completing the market alert, prices are ramped higher. They then trade sideways, and then we get into the main event and we see prices moving higher once more. And it is just sheer lunacy. But it is the way it is, and I keep saying it, that they want these markets to keep moving higher. They just want new highs all the time, just driving the market up, because they believe with the election next year that if the stock market's on the high and the 7 shares that people own in Amazon or Netflix or Facebook, as long as they keep going up, everything is fine. And it's not fine. It is just unbelievable. It really is that this market can continue to move higher. It's certainly not on growth, but on manipulation and QE. That's 60 billion a month that the Fed are now printing. The overnight repos are I wouldn't say out of control, but are increasing. And yet the stock market makes new highs, and they reduce interest rates as well. It's just unbelievable that this market can do this. But like I say, it's pure manipulation, designed to give Trump what he needs for being re-elected this time next year. But I tell you what, 12 months of further higher prices and trying to keep this market on the highs is going to take some doing. Think about it logically. They're already printing 60 billion a month. They've already reduced interest rates. They are still trying to do a trade deal, and that's the only thing that's keeping the market on the upside at the moment, and the levitation alive. So what happens when the trade deal's done and interest rates have gone to zero and they're printing 60 billion a month? How are they going to hold the market up then? And not only that, but we've also got the yield curve inversion. We can now see that this is the highest it's been post inversion. We're now at 0.36, and you only have to look across to the left and we can see that things are back to where they were this time last year as far as rates were concerned, 0.36 on the spread. So it's going to be a very interesting exercise in trying to hold this stock market on the upside, apart from selling the VIX futures heavily to reduce the volatility. But dangerous game. It really is a very dangerous game. Once you take the natural order out of the market, the free market, then a price discovery, then you've got a major issue with holding prices. There's no doubt about that. So yeah, you can see there yesterday they just continued on higher. The market moving up, huge range, but overnight prices starting to come down a bit there. So let's just have a roll over and see what's going on. The market back below the 200 MA but sitting on the DP. I mean, what it boils down to is what news we've got today. We don't have any news. It's a quiet week, so all we need is another Trump tweet today for a trade deal is done. All of that utter nonsense from him. And we're back to the upside. Like I say, that is what they want. It makes me wonder, to be honest with you, if they want the market to go to 30,000, which is about 2,400 points away at the moment, which is nothing for the Dow when you're seeing these sorts of moves yesterday. I mean, if you look at yesterday's range from this bar, this is just ballpark, but it gives you an idea. 371 points yesterday in that range. So, a couple of thousand points is neither here nor there. We've seen the market do this from the last correction. So yeah, an interesting one. And then of course the pound didn't like what it saw yesterday, or what it heard with the Bank of England. This banging its head against the DP and the 200 bar moving average, and then prices moving lower there for the pound, and overnight finding a bit of stability. What makes me laugh is they talk about the Brexit uncertainty being the catalyst for the economic slowdown in 2021 in the article, and yet it's again utter nonsense, because it's not in this one. If I just go back, there was another one I was looking at, forecasts. Where are we? There you go. This one here. When they're talking about forecasts 2021, as two policymakers call for a cut in interest rates. I don't know where they're getting 2021. Blimey, 21 would be a long time away. There we go. Yeah, so 2021, they're cutting economic growth. I'm telling you now, based upon the inversion in the yield curve, this time next year, there won't even be a cut of 0.5%. Wow. Honestly, the rubbish that's put out, never tell the truth. Just make it look like it's some other political organisation's fault or whatever. But these central bankers are dangerous people. They really are. Anything to save the bankers. Unbelievable. Anyway, a quick look at Bitcoin. Not a lot to report for yesterday. The market still sideways, as we can see here, not doing a lot at all. You see there. So let's see what today brings as trading unfolds. And like I say, keep an eye out for Trump and his Twitter finger. There's no doubt he'll be doing whatever he can to try and boost the markets and send them further to the upside. But we are due for some profit taking, as seen by the implied volatility. Again, I need to check these figures because they're so tightly coiled, and I've never seen this. I mean, we've got the odd one or two here where it's sort of moved down slightly, but this is really tight in this area here at the moment. So I do need to write and check that they are actually updating this in real time, and it's not just some sort of forgotten and it's still calculating but not correctly. Just doesn't seem right, so I'll double check that. But then, given that we are up at these sort of levels with prices, it maybe is right. But again, we are due for a correction in this market, if they will allow it. It's as simple as that, because each one, you can see the last one that we had, they didn't allow this for long. This one they did, and this one, but this one they wouldn't allow it for too long. So maybe they'll do whatever they can to manipulate the market to remain on the upside here. Okay, that will do it for this one. Let's see what happens. It's certainly interesting, if nothing else, at the moment. Okay, thanks for watching. See you in the next one.